Oh, good morning, good morning. Today is Tuesday, August 30th, 2022, and I'm Kenny Paul Curry, your host of the party. And here's what you need to know, right? Stocks are attempting to find a base as they continue to churn. We almost tested 39.96, which is a key level, and it did hold. Get to know what the sacrifice ratio is, because you're going to hear lots more about that in the coming months. And now I have to ask, is 3% the new 2% when it comes to the inflation target? I think so. The VIX reveals some angst, but not nearly the capitulation that we've seen in earlier sell-offs. And what are we having for dinner tonight? We're having the chicken Provençal, but we'll get to that in a moment. So stocks churned yesterday, right? Moving lower and then rallying back, only moved lower again as investors tried to recalibrate their mindset after the bombshell announcement we got from JJ on Friday, leaving investors to have to come to terms with what's now proving to be a more aggressive Fed than many had previously thought. At the closing bell yesterday, we saw the Dow had given up another 185 points, or 0.6%. The S&P down 30 or 0.7. The Nasdaq lost 125 points, or 1%. The Nasdaq lost 17 points, or just under 1%, while the transports gave back 150 points, or just 1%. So here it is. Now get ready, because you're going to start hearing about a new ratio. Well, it's not really new, but when inflation was running at sub 2%, no one really cared, so no one talked about it. But now that inflation is running at 8.5%, it suddenly becomes more important, and it's called the sacrifice ratio. And so you ask, what's the sacrifice ratio? Well, this ratio represents the level of unemployment an economy has to face in order to bring down inflation. Currently, the unemployment rate is 3.5%, and the PCE is 6.5%, all while the CPI is 8.5%. What the sacrifice ratio tells economists is what the unemployment rate has to be in order to get inflation down to the Fed's target of 3%. So I know you think it's 2%. That's what they keep telling us, but I'm telling you, get ready, because they're about to redefine that target as well. They're going to make it from 2% to 3%, because 2% is going to be very hard to achieve without creating a massive recession and disruption to the economy. So now, estimates now suggest that in order to get the PCE, which is the Fed's favored inflation guide, down to 3%, we'd have to see unemployment approach 6%. And that would mean that more than 2 million people would be sacrificed, right? They will be out of work, which is why 3% will become the new Fed target. You see, if they push harder, then the unemployment rate would have to go higher, and that would sacrifice even more people, causing too much pain. Or at least that's the feeling right now. Remember, in 1982, Volcker had to push rates at 21% as inflation was running at 13%. And that pushed unemployment to 10%, leaving 10.7 million people out on the curb. Now, need I tell you what that was like? I don't need to. Find any baby boomer and they will tell you the same story. It was ugly. And yes, I'm at the tail end of the baby boomers. Now, understand that whenever a rate hike cycle begins, markets become a little volatile and sometimes erratic. But that doesn't mean you bail. It just means you become more selective in your names and in your portfolio. But when the rate hike cycle suddenly becomes even more aggressive than what many were prepared for, then the moves can become even more volatile and erratic, which is what we've seen. And with inflationary pressures building, no one is exactly sure what's next, because it's been 40 plus years since we've been in this situation. And for the past 13 years, we've been in a zero rate, money printing, Fed bond buying environment. And that is also about to change. Rates are going up. We know that. Inflation remains stubbornly high. We know that. And the Fed is about to start reducing the balance sheet to the tune of $95 billion a month beginning next week. And that is just going to add a new dimension to what is already an anxious time. But none of this should be a surprise, right? Because we knew this. The only thing we don't know is how will the algorithms or investors react once it really kicks in. But let's not get ourselves all worked up just yet. In the end, the rate hike cycle is going to prove to be tough to manage. And for those that still think the Fed can manage a soft landing, I would say, I don't think that's possible, nor did I ever think it was possible. But hey, never say never, right? I guess anything's possible, but Treasury prices ended the day lower, right? Which sent yields up. but the curve still remains inverted, right? With the 2s yielding 3.4%, the 5s yielding 3.25%, and the 10s yielding 3.1%. And all that means is that the recession is coming. The curve has been inverted for 10 weeks now. 10 weeks. Not 10 minutes, not 10 hours, not 10 days. It's been 10 weeks, which is 2.5 months. So unless they change the definition of what an inverted yield curve means, then it just means we're due for one hell of a recession. And so that goes back to the whole soft landing conversation, which I don't think is happening by any stretch. But I hope I'm wrong. Okay, look, oil surges higher, right? Rising $4 a barrel yesterday, or 4.2%, closing at $97 a barrel, right? This on continued speculation of OPEC plus supply cuts and ongoing conflict in Libya. Then overnight, there was this unrest in Iraq, and that also caused some concern, right? Iraq is the 4th largest oil producer, so any disruption to their capacity is going to cause prices to surge. But Reuters tells us this morning that the unrest has not caused any issues for their production capacity, so oil is now churning, right? Backed off a little bit, is just now churning. A quick look, if you look at the oil chart, right, a quick look at the chart is going to show you that we came off the highs of June, right, $115 a barrel. We traded right down and through short-term and intermediate-term trend line supports down about 25% to find buyers at the long-term trend line at $88 a barrel. We bounced around for a month or so, and now we've surged back up through short-term trend line resistance at 94.80, only to kiss intermediate-term resistance at 98.20. Which represents a 15% move up. Now, if we pierce 98.20 again, then that opens the door to higher oil prices in the weeks and months ahead. Recall, winter's coming in the Northern Hemisphere, and Europe is staring down an empty pipeline as electricity prices go hyperbolic. I would not be surprised to see us retest the June highs before long. Look, this morning oil is holding tight at 96.80, right? But it's right in that range. Gold ended the day yesterday at $17.50 after testing as low as $17.30 an ounce. Look, yesterday I said gold took on JJ's comments in stride, right? Suggesting that the idea of a Fed pivot was very premature. If rates keep rising and then remain elevated for an extended period, as JJ told us, and inflation becomes as stubborn, then gold should remain under a bit of pressure. But I think 1,700 is the floor. But once the markets digest the fact that rising rates will cause a marked slowdown and inflation proves to be more difficult to manage, then gold is going to start to shine again. This morning, gold is holding the line at $17.50 an ounce, right? Right there above long-term support, but kind of in that in the middle of that 1,800 range. The VIX, which surged on Friday on the back of that meltdown, continued to move up yesterday, closing at 26.05, suggesting that the nervousness is alive and well, which just means that investors are coming to terms with what's next. The VIX, though, remains well below the highs of June, May, March, and January, which was around 37-ish. And that's good, because while the current levels suggest that investors are a little bit anxious, it's not suggesting complete capitulation, which is what a 40 number would suggest, right? So you got to keep your eyes on the 40 number. We're not near there yet, so there's no reason to get all hot and bothered. Eco data today includes nothing that I think is going to move the markets at all. The real action is going to start tomorrow when we get the ADP employment report, mortgage apps, and Chicago PMI. Thursday brings us manufacturing PMI, construction spending, challenging job cuts, and total vehicle sales. And then Friday brings us the all-important non-farm payroll report. But remember, it's also the beginning of the long Labor Day weekend. There's lots of empty desks, and they're going to leave the algorithms in charge. So it's going to be very interesting to see how that works out. Look, U.S. futures this morning are higher. Dow futures up 200, the NASDAQ, the S&P's up 30, the NASDAQ up 130, and the Russell's up 14. Remember, it is the end of August. Like I said, we've been talking about this. Moves can be exaggerated going into the Labor Day weekend in either direction. So this is just another reason not to make any dramatic moves if you're a long-term investor. If you're a day trader, then none of that applies, right? All those rules get thrown out the window because the day trader loves the chaos and the confusion. In fact, they feed on it, so they actually want more chaos and confusion. Yesterday, Minneapolis's Fed president, Neely Kashkari, was quoted on Bloomberg telling us that he was happy to see the market's reaction to the Powell speech, saying that finally investors are taking it seriously, and any idea that the Fed was about to pivot is wrong. The Fed is committed to fix the very problem that they created. Well, he didn't take responsibility for helping to create inflation, but he is taking responsibility for fixing it, which is comical, right? But they are prepping him to become a voting member in 2023. Remember, right now he's not a voting member, right? So anything he says is really his voice, although I think it's their voice that they put out to float the balloons, but we talked about that. So they want to get him comfortable with his commentary. And remember, he does want JJ's job, and he makes no bones about it, right? He is vying for that Fed chair seat. I think a lot of people in front of him, though, so I'm not so worried about it. European stocks are all high this morning after taking a bit of a beating over the last couple of days. Markets are up about 1% across the board this morning. The ECB board member Isabel Schnabel telling us that global central banks must act aggressively to tackle rising inflation, even if it means dragging their economies into a recession. Oh, my God. There is no eco data today out of Europe to drive any further action. So it's all going to be about, what's next. The S&P closed at 4,030 after testing as low as 4,017, leaving the trend line at 39.96 kind of untouched. Now, this morning's futures action is suggesting higher prices. So for now, the trend line has proven to be support. Near-term resistance is going to be found at 40.70. And if we pierce that, then you're going to look for 41.50 would be the next target. If for some reason we do a 180 and do an about face, then support at 39.96 is key. If it fails to hold, then we should expect us to test the lows of June, which will take us back to 36.25-ish. I don't think it's going to happen, but that would be the way it would work out. Okay, so what do we have for dinner tonight? We're having the chicken Provençal. Now, this is a great dish, one that you can use for a large gathering. Think Labor Day weekend. Now, for this, you need legs and thighs on the bone, always better on the bone. You need celery, carrots, onions, garlic, potatoes, olive oil, butter, salt and pepper, crushed tomatoes, and a dry white wine. You know me, I always use a Pinot Grigio Santa Margherita. If you don't want to use the white wine, you can use chicken stock instead. Preheat your oven to 325 degrees. Now, begin by heating up some olive oil and a quarter stick of butter in a large frying pan, right? While that's happening, take the chopped celery, carrots, and onions and crushed garlic and put it in the bottom of a deep dish baking pan, like a deep dish aluminum pan, right? Put all the veggies on the bottom. Now, season the chicken pieces with salt and pepper and then fry them in the butter and oil until they're golden brown all over. Skin on, right? Now, place those fried chicken pieces in the baking dish on top of the vegetables, right? Now, after you've fried all the chicken, you're going to add another dollop of butter to the saute pan to glaze it with the white wine, right? I use Pinot Grigio, bring it to a boil, let the alcohol burn off, and then take that and pour it over the chicken. Now, in the same pan, add the crushed tomatoes, season with salt and pepper, heat it up, bring it to a boil, and then turn it down to simmer. Now, let it sit there for 5 minutes or so. Now, pour the tomatoes over the chicken pieces and then cover it tightly with the tinfoil. Put it in the oven at 325 degrees, bake it for 30 minutes. Now, peel the potatoes, cut them in half, slice them into bite-sized half moons. After about 30 minutes, add the potatoes to the chicken, cover it back up, and let it cook for an hour. Now, take the foil off the chicken, turn the heat up to 375 and let it continue to bake in the oven for another 20 minutes or so. Then turn the pieces over and let the chicken cook on the other side for another 20 minutes. You want the chicken pieces to just brown up nicely. When complete, remove it, serve it on a large platter with your choice of vegetables, maybe butternut squash or green beans, maybe both. You want a large mixed green salad. You're also going to take the veggies, the celery and carrots and onions that were in the bottom of the baking dish, and serve those around the chicken because they're really delicious. They get really soft and really juicy, and they add a lot of flavor to the chicken pieces. It's a simple dish to make. It goes a long way. You can feed a lot of people, and Labor Day weekend is coming. In any event, you can enjoy this with with a beer. You can enjoy it with your favorite red wine. You could even have a nice rosé if you want. It's completely up to you. Just set it up and make it look pretty because it's a job well done. In any event, until I see you tomorrow, take good care.